Good afternoon. Welcome to the TheoTRADE afternoon video. I'm Blake Young. Today is July 18th, 2024, and we're going to talk about the regular trading hours retest. Now, the reason why we're talking about this is kind of about the gap. It's about the gap and the overnight behavior that caused these gaps, and we can still do this in conjunction with rotation. I want to show you how we can read it, what we look at. We're going to look at all 11 sectors and what opportunities there were and what opportunities are still coming in conjunction with these gaps. So the main thing to remember is that a gap is not something magical. A gap is actually overnight change in price. And if we had a 24-hour market, there would be no gaps. If you look at the futures markets, this space between this close and this open would be one big red candle, but it's not. So this is just showing the regular 7.5 hours of trading in the US equity market. So starting at 9:30 Eastern, here's where we were, and this is where we were at 4 p.m. Eastern the previous day. So again, in the overnight, there'd be a big red candle showing you that there was action activity, whether high or low volume, in the overnight price action. That is what we're looking for. We're looking for that difference in those two. If we can find that difference in those two, then what we're going to find is there's an opportunity to see it retest that open. The thing that I look for is, in this case, since it's a gap down, I want a gap down and a close down. So I want to know that there's follow through to the gap, that we've traded down and we're closing down, and we expect it to continue to go lower in that next move. Then what I want to look for is I want to look for it to retest where the market built its largest amount of volume. So on the open of this day, so Wednesday's open on July 17th, we know that all the overnight price action that caused this to gap, there were hundreds and thousands and millions of dollars worth, and possibly even tens of thousands and hundreds of thousands of contracts traded on the open, because there are stop losses triggered and orders triggered right there at the open. So that open price of 558.80 is going to be the area that the market is wanting to retest. So even if we sell off and close down, the market's going to want to retest that. Now, it's super obvious on the SPY where that played out. You can see that we bounced up here and we traded to that level and almost gapped to it perfectly today. Now that it's happened, now what do we do? On this chart and this move that we're seeing currently, what we would expect is that we are going to move the distance of the gap to the close from the retest. Now that's a lot to say, so let me show you what I mean by that. That means the distance between 565 up here and this close should repeat from the retest of yesterday's regular trading hour open. So it becomes a micro bear flag. It becomes a micro price pattern in this move. And so if we're going from that 565.16 to the close price of the next day, which in this case was Wednesday, we'd be looking from 565 to 556, about a $9 move. And then if we were to do the $9 move from the retest of the open, that means 558, 559, we would be expecting it to drop down and retest that $9 move. So we're going to do this on the other sectors, but this tells us that as far as the S&P is concerned, the SPY, we still have a little bit of movement down. We could probably see it retest 551. So there's still some opportunity to see it drop another $2 on this particular setup. But we're going to do this across all the sectors because some sectors went up and we can still do the same concept, the same strategy there versus the ones that went down. So the ones that went lower, like XLK, you can see that we had the gap down at a lower level from 233 down to 228, closed here. We didn't quite get there, but I'd be looking for it to trade all the way back up to 228 if possible, and then expect it to duplicate this move from 233 down to this low here of 223. So 233 to 223, about a $10 move. Now, the fact that we didn't quite get there, normally I'd say wait till it retests that regular trading hour open, but today's high could be used to target this, which means today's high 226 down $10 should see a 216 test, which is going to bring you down into this area and into the next area that I've been looking at as far as a support or demand area is set up for. Now XLC, again, we're going to go through all the sectors. Gap down, filled the gap, retested the gap on the open. I shouldn't say filled the gap, but retested the gap on the open. So XLC has done exactly that. We'd look for the close price, 86.85, to this close price, 85.54, and we're going to look for that duplicate of another dollar lower from the retest of not the high here, but actually the open here. So from 86, I'm expecting it to go down to 85, just a little shy of 85, which means we're going to go back and retest this next low. And we could do this on all the major sectors. Let's take a look at energy. Energy didn't give us quite the same gap, but we had a gap up and then a gap down. So we're looking for a gap up, close higher in this case, instead of a gap down, close lower. So a gap up, close higher. And we would look for it to retest here. The problem is it didn't. So we'd go from this close, and let's just draw a line on it again. We'd be looking for this close to this close on the repeat of this. We didn't get there, so we're going to go from this distance here and from this low to this high, which we've already played out. And it's already run that distance. Now it could continue to run, but we're just playing gaps. We're measuring gaps on this move. So XLE has already pulled back, already rallied the distance. There's not a lot more to chase down with XLE, but on things like XLP, we gapped higher, pulled back. This one did not pull all the way back to the regular trading hour open. So what I'm looking for with XLP is the distance from this close, 77.74, to this close, 78.74. So we have another $1 move here. Now we did not pull all the way back down to this open. But if this is our low, and that's a question mark still, if this is our low, we'd be looking for $1 higher, which means I would be looking for a target at 79.41. So there's still some upside potential with XLP. And even if we pull all the way back down to this open, then we're going to look for that gap to be a $1 move higher, which in essence is going to take you right back up into the 79 area. So here where we're at for $1 higher, or back down to this open for $1 higher. Both are lined up to give us that potential trade. Let's look at utilities. Again, we're just going through all 11 major sectors here. Utilities didn't really give you much of a gap here, but I do want you to see the bearish gap with a bearish close and a retest here. So that being the case, we went from this price to this price. And then when we turn back up, I'm going to use this Fibonacci extension tool to do this one. When we went back to that level, my expectation would be I could short here with utilities falling back down to 68.72 if this gap is going to fill out its trend. That pulled back, triggered here. We actually had a little bullish gap through there, but it's already traded for the full distance. And you could see it would have been a minor scalp. We would have gone from this gap to this close. When it pulled back to that gap space, there's your target right through there, and it was a 50-cent move. So the bullish one already played out. The bearish one still could play out, but it's already done the gap, retest, and fill. And so that's what we're looking for. XLI, industrials. And we just had gaps across the board. The market had a lot of gaps here. And so what do we see here? We had a gap up, close higher, and we haven't pulled back to that open yet. This one is the one we're looking for, matching the rest of the market, is a gap down, close lower. And then what do? We retested the gap, the open, regular trading hour open. That's your short at 127.64 with the expectation you're going to go down to 125.97. It pulled back, gave you the short position, and hit the target. And this works on the short term, it works on the long term, it works on the intraday. It works as long as there's a gap up, close higher, or a gap down, close lower. This idea, the strategy can work to set you up for your next trade, your next target. We already looked at technology, so I'm going to go to basic material now. Basic material gave you a tiny little gap down, close down. Not a lot to chase there. It did refill and hit the target. So all of these have either hit the targets or haven't set up the trade completely yet, but every single one of these has played its gap rules. So what do we see up here? Gap down, close down. Now this one missed it by pennies, but let's get a target out of XLY. We go from the close here, because we gapped down, closed down, and then we'd say if it fills that, we're going to go short at yesterday's regular trading hour open. We got within a matter of literally 2 pennies there. So if we go off of the high, we're at the target currently for XLY. This would be the expected move lower for me, and it's already hit there. It's already played out to that low on that. So I'm showing you this strategy because this will return. This is going to happen again. It's going to happen probably multiple times. On XLF, yesterday was a gap down, close higher. That turns off this method. But today, currently, is a gap down, close lower so far. And if this is where we're going to finish, then XLF is setting up for a trade to retest today's open at 43.68, where I'd want to short it from 43.68 to 43.23. Quick swing trade down on this particular stock for a 1% move, likely all set up by tomorrow. Now, this is not closed yet for the day, so it really could give a bigger target, but right now that's what we'd be looking for, is about a 1% move off of today's open lower. And that would be the setup that we'd be seeing in financials. Healthcare, XLV. Same idea, we gapped down, closed up, which would say don't take that strategy, but today is the gap down, close down. So healthcare just got pummeled, and that would mean that we're looking for this size of a move, a 147.50 to 150.50 roughly, a $3 move. So if I look for this to retest today's open, or put in a high tomorrow at some point, up to 149.60, that should give me a downside target for healthcare at 146.58. But I'd like to see it pull back, give me a trade short here, and then trade it back down to these lows. Now, the nice thing is on these reversals, on the gap down, close down, if I pull back to the regular trading hours open, I don't have to do a one-to-one trade. I'm looking for a 100% repeat of the move, but I'm going to only go with the last high, or 50%, whichever is greater, and get a 2-to-1 reward risk ratio, which we've already shown that has been accurate about 80% of the time so far. And anytime you get a gap down, close down, or a gap up, close up, that's what we're going to look for. We're going to look for a pullback, preferably to the regular trading hour open, and then trade back up that distance. If it's a gap down, close down, then we're looking for it to trade back up to the regular trading hour open and trade back down to that next target. Every time it should give you a near a 2-to-1 reward risk ratio, while also giving you a very defined entry and target on all of these setups. And this setup would apply to things like gold as well. This is GLD. We had a gap up, close up. I already did this distance. We did the gap up, close higher. And then we've pulled back. We have not pulled back all the way, but the gap from the close to the close, and we got this little pullback. If we get all the way back down to 225, that would be the bullish entry to retest the highs at 229. If this is all it's going to pull back for us, then we'd be looking for a new move up to 230.86. Notice that this is a gap up, close down, gap up, close down. So we don't worry about those gap up, close down. Those are exhaustion gaps and not the ones we're going to measure for the next move higher. Anywhere above this open will set us up for another bullish move to either 229 or 230 on the way up for GLD. All we need is a gap up, close higher, or a gap down, close lower. This also does work on intraday and longer term, like I said, but we can also take individual stocks as well. It doesn't have to stay to the big indexes. We can look for the same ideas, the same strategies in stocks like NVIDIA. You can see this one was a gap up, close down. That says don't do it. This is a gap down, close down. This says go ahead and do it on a retest. This one doesn't retest until here, but then it runs the distance back down from the close to the close. Over here, gap up, close down, gap up, close up. This one plays out to the top side. Gap down, close down here, which means NVIDIA still has more downside pressure. Where are we at? This is the gap up, close up. This is the gap down, close down. So we go from the gap to the close, and we look for the pullback, which is right there. And NVIDIA has the pressure, the opportunity, the potential that we could see NVIDIA drop down to 112.96 from 120. That would be my target for the downside. And now that we have this area through here, since we've made a new low, I don't even think you have to risk all the way up to 126. You could get away with probably risking today's high, which would be about 120, say 122.50, risking $2.30 for a potential $8 move. Well, that's going to do it for me today. Thanks for watching. We'll talk about this strategy and this gap technique more in the future. Join me tomorrow morning for TheoTRADE Live as we continue to talk about the rotation in and out of sectors and in and out of major macro instruments. Otherwise, join me again next week. Have a fantastic day.